We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index. Hit a dip area here 2 days ago in the after hours. Yesterday, full run. We talked about why it went up higher. And today it continues to push up slightly higher. And today within the volatility, our SPY bot at 1:10 p.m. sent out a bull indicator. And from that moment forward, the inflow stayed above the midpoint, switched from red to green as you see there in the chart, full strength on 42 vision, and call options went up 100% plus within an hour, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord, getting connected over to our 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY going higher today. We're going to talk about what happened. There was actually a data that was released today, and we're going to look at some articles. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the first home run of the day was from our AMD bot. Our AMD bot sent out a bull indicator at 9:50 a.m. From that moment forward, the inflows crossed the midpoint to the upside, stayed above for most of the day, full strength on 42 vision, and call options went up 300% plus within hours, guys. If you guys want to receive this clarity and edge over the charts, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with the SPY, the S&P 500 index, continuing to push up higher off of the optimism fueled by the inflation numbers that recently came out. And on top of that, as I stated earlier in the video, as you see it popping up here on the screen, there was data that came out, and it's the consumer sentiment report here, and it came in lower than expected. We're currently in a market environment that bad news is good news for the markets, right? Consumer sentiment implies if it's lower than expected, right, or the lower it goes, that the Fed's policies are working on the economy. We're going to talk about how that indirectly affects and what Wall Street analysts are feeling, because they're basically stating that things are getting gloomier. We're going to break that down in today's video, but let's go ahead and pull up the bull and bear indicators in the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors, all looking to learn and grow together by using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY under a bull indicator since yesterday in the pre-market. After yesterday's data release, and then you could see the inflows picked up, and they've stayed above since yesterday all this time. Now you could see things have slowed down a little bit because it went from way down here at 375 all the way up to 395. That's a 20-point move, and today things only jumped up about $3 to $4. Well, it's because some outflows are happening here. It is Friday, a little bit less volume, and the momentum still stayed above because those outflows have not dominated yet, right? And these inflows were so strong that it has not been able to cancel out, even though there's been some outflows, because it stayed above the midpoint since yesterday, right? And we were watching that very carefully here. And today it's managed to stay above, and consumer sentiment pushed it up even higher with those numbers coming in lower, right? Now, on top of that, the inflation optimism, right? This is something that happened yesterday. That's why things started to move very quickly. That inflation for the first time has been significantly lower, or at least has left that 8% area and has gone into the 7%, right? And on top of that here, we have Wall Street's outlook for the S&P 500 earnings to be getting gloomier, right? Analysis now expect blue chip earnings, right, in Q4 to be negative, okay? How does this go ahead and peak up fear, right? or create uncertainty? Well, because peaking inflation may not signal that all is clear for stocks, because inflation is one part of the puzzle, but what comes after that, if there's an extreme slowdown, right, because it's what the Fed is trying to do, there is a possibility of an earnings recession. And we've talked about this in previous videos. We've broken it down with other articles. And here we are with consumer sentiment slowing down and showing those numbers. And eventually that narrative of seeing that bad news be good news, because it means that the Fed's job is working, or policies, right? Eventually bad news will be bad news because it will show up in corporate earnings. And that's where the earnings recession, quote unquote, starts. And it could affect stocks because stocks are affected by profit margins, revenue growth, slowdown, and so forth. So it could be a big surprise to the markets if this eventually slows down due to what analysis price targets are showing and how they see things getting gloomier and fourth quarter to be negative. We'll see. They could be wrong though. It's too early to tell, but something to not ignore while all of this euphoria with CPI is going on. This is a really fast move here. And going into next week within the volatility, you could see here that the 15-minute is getting close to the midpoint as well. It's still under a bull indicator, but if things start to pull back down and cross to the downside support levels and the midpoint as outflows start to dominate again, it could roll over into the 30-minute. I'll be watching if a bear indicator pops up. And same thing here on the 30-minute as it's very close to the midpoint. If it goes ahead and crosses to the downside, it could start reflecting here into the chart if support starts to get broken through and if this bull indicator gets canceled by a bear indicator in the process. Now, on the 1 hour chart though, it's not as close to the midpoint, and it's going to be critical to watch as well, because in the bigger picture though, outflows have began today, right? Yesterday it was all green, crossed over through the midpoint. It's red right now, but still sitting at inflows of 9.71. I'm going to be watching as the 15-minute and 30-minute, as they're a little bit more volatile, if they're pulling downwards or go below the midpoint, how much further will the 1 hour follow, and will it find support and stay above the midpoint and bounce back up, trying to create on any certain pullback, right? A setup before the next bull run, as I like to call it. But we got really close to 400 here, and some of the analysis price targets are pointing in the short term, as we've talked about in previous videos as well, towards 4,000 or 4,200 before reality sits in, right? And this is where they're probably getting this reality sitting in from the 4Q to be negative, right? The fourth quarter of these earnings. So as you see it here, lots of strength to end the week, but next week will be crucial. And the first support that I'll be watching is down here at 393, and below that is 389, guys. Those are the key levels I'm watching if these outflows cross to the downside on the 15-minute, on the 30-minute, and how far down will they bring the 1 hour with it? Because if that 1 hour crosses, it could impact the chart and reflect in it much more significantly, right? I'm going to be watching that very closely here within the charts. Now, those are the key levels to the downside, and if a bear indicator pops up, that cancels out this bull indicator from down here at around 374. Now, to the upside, based off the history of the chart, we've broken through significant amount of resistance levels, right? We're at 398 here post-market. The first resistance above that is 400, and above 400 is back towards 405. And above 405 will be towards 410. Now, based off inflow versus outflow, you could see here how we recently hit yesterday some extreme levels of inflows here at around 15.5. And it rejected the same amount of area here when things picked up really quickly on October 13th. And here we are with it pulling back. Now, if things start to pick up here and the inflows start to go higher and we break above 400, and we're somewhere between 400 and 405 at those resistance levels, I'll be watching the inflows if they could cross back above 4.5 and back up here towards 8.0 with the inflows getting strength here. That's what I'm going to be watching going into next week. As always, guys, thank you guys so much for watching, and let's make some money.